Hello, good morning, guys. Welcome to MacJFS channel. All right, so in our previous lesson, we discussed the explanation of key terms, the types of financial markets, how forex trading works, risks in forex trading, and we also look at the successful entrepreneurs in forex trading. And the last one is the requirements of forex trading. Okay. So for those who missed the lecture one and lecture two, I advise that you go back, go watch it, build up your knowledge, and also never miss out on every key information. All right. So in this lecture, we're going to consider the basic terminology, some basic terminologies, and what moves the market, and also choosing a forex broker and forex trading platforms. Okay. So we'll start by considering the basic terminology. Okay, so we have a pip. So a pip in forex trading means the smallest price movement. So if let's say the price of the euro dollar, so euro dollar charts, the current price is let's say $1. So 1 point, let's say 1000. So when it is like that, it means 10 cents. So 1.10. And now the price moved up. So let's say the price moved up to 1.30. So it was 1.20. Now the price moved from 1.30, which means the pip will be 20 pip. So the difference between the now price where it moved and now the previous where it's where and where it's moved, or where you entered and now where the prices currently are. So the difference between them is called a pip. It can be it is the smallest price movement in price. It can be just it can be cents. It can be just a cent or something. Yes, so that's pip. And our spread. So the spread is basically the difference between the buy and sell price. So when there's liquidity in the market, the spread is very low. It's very very low. And if there is no liquidity in the market, the spread is very very high. The spread is very high. So always want to trade pairs that have low spreads, and the lower the spreads, the better the entry points. Because the spread is when, let's say, it's the spread means that when there's high spread, it means the market becomes expensive. If I wanted to buy at a certain specific price, I won't get that specific price, but I would be uh, I would be placed in another price level. I don't know whether I get it. So the place that I wanted to enter, I don't enter there, but enter at a higher price. That maybe I did not intend in entering at that price. Okay, and then the leverage. So a leverage is a borrowed capital to increase trade size. In our previous lecture, I think we talked about leverage, and we said a leverage is just the opportunity to buy more volumes of currency pairs that in actual sense you won't be able to buy. So let's say you wanted to buy 10,000 units of, let's say, euro or dollar. So you wanted to buy 10,000 units, but because of the money you have, your money won't support you to be able to have those 10,000 units. You use something called leverage. So the leverage gives you an opportunity to hold large amounts of trades as if you had the money. But the key thing is that the higher the leverage, the higher the risks, and the lower the leverage, the lower the risks. All right, the next one is the lot size. So the lot size is the volume of a trade. So the lot size simply is the number of trade you want. So the amount of, let's say, currencies you want to buy. Yeah, so there are, we'll go into details in as the lecture progresses. We'll go into details of the lecture because we have the categories of lot size that we can use. All right. So what moves the forex market? What moves the forex market? So economic events move the forex market. Political events move the forex market. Natural disasters, market sentiment, and big players. So, so the economic events can be what is going on in the world. What is going on? So, let's say there is a war going on. So war would fall under let's say political. So political events. So this war can affect, let's say, the oil industry, and this oil industry's economic event. So it will affect in turn the whole world. So everything leads to the other. We have natural disasters. So when there's a natural disaster, it will affect economic events. And also market sentiment and big players. So market sentiment is the overall idea about employment. What people think is gonna happen in the future, which has not yet happened. So what people are speculating in the forex market. And everything, so the political events, the natural disasters, the market sentiment and big players all affect the economic events. In this economic events, it's what really controls the forex market. Yes. But the political, natural, and market sentiments are some of the factors that can affect economic events, which in turn will affect the forex market. So, so we discussed that a broker is the one who matches buyers to sellers in our previous videos. All right, so how do you choose a forex broker? What are the characteristics of choosing a forex broker? So the first one, you have to know that it is regulated by a trusted authority. And two, it offers low spreads and fast execution. And the three is easy deposit and withdrawal. And the four is offers demo accounts for practice. So we don't want to choose a forex broker that is not trusted by authority. So if it's not trusted by authority, this means that we can have threats to fraud. You can just fraud us and we can't do anything about it because it's not trusted by any authority. And we also discussed that the lower the spreads, the faster the execution. The lower the spread, the less expensive the market is. Yes. So we want to find brokers who offer low spreads, even when the market is not all that liquid. All that in order to have faster execution, so faster matching, and also we also want a broker who offers easy deposit and withdrawal. We don't want a situation where we deposit and we can't withdraw. No, we want to deposit, withdraw our profit, and enjoy our profits. Yes. And also, we want a broker who offers demo accounts for practice. A broker who offers a virtual money, which is not it's not a real money, so it's just a virtual money for just practice, for practice. Which means that we want to build our confidence in the forex market so that when you get a real one, we're able to trade it very, very well. All right, so these are the characteristics of choosing a forex broker. So the forex trading platforms. So many or most forex traders use MetaTrader 4 or MetaTrader 5. So these are the widely used trading platforms. So what do we use these trading platforms to do? We use this trading platform to place trades. So when I want to enter into the market, I'll just go there and just place a trade, buy or sell. Yes. So yes, we place trades through brokers, and in order to place a trade, we need these platforms. So we have to be connected to a broker. So we'll have to first be connected to a broker So after you are connected to the broker, we will link the broker to these trading platforms. And these trading platforms will help us to execute trades. So, example of brokers, you have the XNES, you have XM, you have a lot of Forex brokers available. Many of them, but please, you have to base on these characteristics to choose a Forex broker so that we will not be liable to any fraud or anything. Okay, so you can trade on PC or smartphone. So you can trade on PC or smartphone. So if you have a PC, a personal computer, or a smartphone, then you can also enjoy trading on the forex markets. That is just what you need. So charts, indicators, and tools. So charts, indicators, and tools are all built in the trading platforms. So if you want to use an indicator like the EMA, so the EMA just calculates the number of or the averages of a period of time. So that's what the EMA does. So when you think it is under average, you can decide to buy. When you think it is over average or overbought, you can decide to sell. So that's what the EMA tells us. And all these tools are all built in their trading platforms. Okay, so now the tips. So the tip that I will give you is that uh, to know whether a broker or a site is trustworthy or trusted or reliable, just go to search in the Google platform, Safari, any search engine you have, and now search trustpilot.com. So when you search trustpilot.com, type the name of the website or broker in, and now watch through the reviews, comments from users or interested parties, and the rates. So if you want to know whether uh, a broker like, let's say, XNES is reliable, I'll go to trustpilot.com. Then I'll sign in, or I'll sign up if I haven't signed up yet. Then now I'll search the name of the website, which is XNES. So I'll type XNES in there, and now it will come. I'll watch the rates, the reviews, the comments. If it is good for me, and I think I can make a reasonable choice by uh, choosing XNES as a reliable broker. All right. So I think we have covered all these points in here. I've covered everything here. And now this is the end to the lecture 3. I hope you are enjoying these lectures. If you haven't gotten to lecture 10, you are going to enjoy lecture 10 because lecture 10 is where you will know basically everything about the forex market. And now advanced option will also be available after this. So please, thank you for making time watching this video, and please make time to be watching the charts each and every day, so in order to build yourself in your knowledge in forex trading. All right, so thank you very much, and please subscribe, like, and comment on my videos. Please subscribe. Thank you very much. So it's bye for now. Thank you.